I just exploded.
Ryan, why don't you pull up Amazon's margins real quick?
Well, yeah, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when you said that.
Wow, physical philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Hello, everybody. It's Saturday, and this week it's actually Saturday, 8 p.m. Eastern.
Yep.
Right, Saturday, 8 p.m. Eastern, you could be doing a whole lot of activities and things that, let's just say, may or may not be accretive to your lifestyle. Fiscal, what are some of the activities that you could be doing that, let's say, are on the pendulum side of not accretive to your lifestyle?
Well, you could be out there in your Honda Civic drag racing, people. Yeah, those street races aren't very accretive. I hear you get your car impounded for that.
Oh,
yeah, I know.
It's a hefty fine.
Yeah, you could be smoking with cigarettes, doing bad things with bad people, breaking the rules is stupid. You might be vaping or stuffing zins into your cheeks. Who knows?
Yep.
I don't mean those cheeks, if you know what I'm saying.
Yeah.
Yeah. You could be doing a butt chug with beer at a frat party if you're double D's. I'm not sure he's doing that, but he could be.
It's the last weekend of college. It's finals weekend. I don't want to assume anything, but let's just say, look, I think I wouldn't be shocked if double D's is on the news tomorrow and for a frat hazing incident.
Yeah, I mean, this person, good point, Mike. Drinking alcohol
is definitely.
Even better.
Sexual behaviors. In order.
Yes,
in order. We got alcohol, sexual behaviors. Yeah, I respect the chat coming in and saving us here. And by the way, the only fee that we pay on this channel, not the impound fee that we were talking about, is the fee to have to buy Evolution stock. And oh shoot, we had to wear the sunglasses. I forgot about that.
Oh,
completely forgot about that. I saw our first guest of the night appear there. Hopefully Seymour Duck shows up this time. Last time we had an Evolution roundtable that we were going to do, and
we had to put out be on the lookout, a bolo for Seymour. Last time he disappeared on us.
Yeah, he is very heavily allocated in Evolution, so I'd be a little more worried this week if God forbid something, he was not happy that Evolution was down. Fucking do it. Assalamu alaikum, trash. Great name. Pumping these lame stocks. I'm not coming to Vegas.
What?
I respect it.
No, you gotta come to Vegas.
Yeah, that's like.
You come to Vegas, I'll go to Indonesia. I promise.
Yeah. More like seamless stock. Yes. Before we get into tonight's heavy packed episode, which was actually brought up by Seymour Doc, and if he doesn't show up, I'm gonna be very sad tonight. We have to shill our Cash Flow Kings channel memberships. Now, Fiscal, what could you do with $2 a month every month?
Not a whole heck of a lot. I mean, can you even get a pack of gum for $2 anymore?
I don't know.
I want to just say I think that we provide a lot more value than a pack of gum for only $2 a month. Just saying. If you want to make a comparison.
Yeah, you could. We've made the fractional hooker comparison. You could be buying like 30 seconds of an escort services. That doesn't last very long.
All right. If you get these on sale, these 12-ounce cans of zero sugar Dr. Pepper, not sponsored, come out to about 50 cents or so a can. 4 cans of this. Would you not give me 4 cans of this a month? Think about it.
Yeah.
For all the value that you get in exchange, am I not worth 4 cans of zero sugar Dr. Pepper a month?
Oh my God, say his name and it appears. PK Investing is in here. Talk about it. It goes to the past. I haven't seen him in forever. Last time I talked to him was a year ago. 30 seconds, but you get 30 days of the Cash Flow Kings channel membership.
Exactly.
And
we love you long time.
Yeah, and you won't get an STD with us.
I can't make any promises on that.
And actually, if you want, We focus on quality over quantity here at the Cash Flow Kings.
Exactly.
If you're only using a 1,000th of a hooker anyway, why pay for the? Huh? I was talking about time, but good to see you have that thought. We'll get tonight's episode started, and who other to have in here than our good friend Chase from FinFluential over on Twitter. Dividend Dude's #1 op, Evolution Gaming shareholder, the cult leader as thrown by Seymour, who I hope gets in here tonight. Welcome in.
What's happening? What's happening, guys?
We had to come in for round 2.
Yeah,
Indeed.
we're here for round 2. I really hope we do find Seymour Duck because he'd be on watch right after.
Yeah, he is
Wednesday.
on a serious watch.
That's 80% of his portfolio is down 20%.
It's 80. I thought it was like 30.
Evolution, he said I thought was 80, and he had something else was like 20. That's what I thought.
Yeah, I think it's Nintendo, which is doing very well on that.
Yeah.
To be honest.
Yeah.
But I mean, if he bought most of his position at the start of this year, he's probably only down like 5% or so.
Yeah, it's really not that bad. Like
that's what I'm down at. Well, not 5%, I guess $5 per share, $4 or $5 per share. So 6%, something like that. It's not that bad.
Yeah. That like my average cost is like 75, 76.
Yeah,
so,
me too.
But
right there with you.
Yeah, it trades around like I'm used to having it trade at like 75 to 77. So like it was only at like 86 for like a week. So
listen, all I have to say is like a 20% drop is nothing to somebody that has held MPW since 2022.
Yeah, dude. I mean, it happens. Every stock will have a 20% drawdown. But what is MPW? Is that Marathon?
Medical Properties Trust.
Medical Properties Trust.
Take a look at the 5-year chart.
Oh yeah, that's a bit of a dumpster fire.
I'm not down on the
dumpster
position
if you make it
anymore, but that's because I lowered my cost basis substantially.
Yeah. I mean, that's what you have to do on dips like this. I haven't bought, but I haven't sold Evolution just yet. You know what? I actually thought the overall, if you exclude unregulated revenues, I thought the report was good. I thought the business is still doing what the business is doing, still firing on all cylinders. It's just the issues they're trying to deal with.
Yeah, like the big takeaway that I kind of had from the research that I did. And by the way, your page did a very good job of like summarizing stuff.
Awesome.
Unregulated, they're basically trying to move away from unregulated markets, which makes up an okay amount of the revenue right now, and they're trying to make it into regulated markets, but like long term, like the growth remains the same from what I'm seeing.
Yeah, I mean, I was diving into the European side, right, of the market. So the European segment, which is a pretty mature gambling market, was expected to grow about 6 or 7% year over year this quarter. It fell -1%, and that was the majority of the revenue deceleration we saw this quarter. It was the European segment. So if you assume, let's say, and we don't actually have numbers for this, but if you assume 15% of Europe revenues are unregulated, I think that's a pretty good baseline because most countries in Europe are regulated. So 15% Europe regulation, 15% of revenues is unregulated in Europe. You assume 7% growth in the underlying. The difference is probably what the regulated revenues grew this past quarter. So regulated revenues in Europe probably grew about 7% or so. The unregulated is the reason why they fell, that -1%, because the difference between 15 and 7% would be the growth parameter. So that's what I take away from that. Europe is still growing. They said that on the earnings call. Underlying growth is solid. Like, let me pull up the stats right here. North America grew 15% year over year and actually accelerated from the previous quarter. Latin America grew 10%. Now that was a deceleration quarter over quarter, but roughly in line with the same growth as Q1 2024. And then the other segment, which is like Africa, grew 20% year over year. So I think everything else looks really solid. It's just that Asia segment and the European segment, and more specifically, I think the Asia segment is now really becoming a worry because quarter over quarter growth is now 2%, and that's a massive issue. But I think if you're an investor in Evolution right now, best thing you do is you hold the stock, wait for the Q2 earnings, and see what Europe looks like, see what Asia looks like. If you see revenues growth roughly the same as it is this quarter, that's probably the bottom signal. If things continue to decelerate, that's when you're going to have to start making allocation decisions. So I reckon you give the management team like one more quarter.
A lot of people are happy with management from what I saw.
Yeah, they're just, dude, the thing with management is, I think what caught people off guard was this ring fencing. It was obviously the reason why the stock sold off. That was the one issue. And then the other issue is the Asia segment. Like, we actually don't know what's going on in Asia, but they are opening studios in Asia. So they obviously see like long-term growth potential. And that is a positive to take away. Like, they're still opening studios left, right, and center. They're opening studios in Michigan. They open another one in Romania. The Philippines studio, I think, goes live in a couple of months, a month or so. They have a studio in Colombia, a studio in Brazil, I think a studio in Ecuador or El Salvador, one of those two regions. So look, they're opening studios left, right, and center. They're going to continue opening studios in the US as regulation continues to happen. So management is confident in the overall growth, that transition from live to from a legacy casino. What would you call it? Out of like legacy casino operators to online.
Yeah.
Like in person. Yeah.
Evolution Gaming. Fiscal.
Yeah. Evolution AB. But look, other than that, the report was a bit disappointing, but that's what the stock price did, what it did.
Do you think 20% was an overreaction?
Yeah. I think it was an overreaction, but the management team didn't give us any color, and that is why the stock sold off. Like, if you actually go to like the transcript and you go to the Q&A, which, by the way, the analysts do a great job of asking the right questions for Evolution. Like, they give the management teams the questions that we all would ask if we were on there anyway. And the management team just didn't answer any of these questions at all. Like, they were very vague. And I think that like compounded a lot of the selling. I think if the management team came out and we just gave a bit more clarity, we would have seen an uplift when the stock opened or during the day. But it was just, they didn't really answer any of the major questions, especially from the Goldman analyst. One of them, was really asking, like, what is the underlying revenue growth in Europe looking like and Asia, excluding the unregulated markets? And he kind of just gave this very vague answer. And he was like, yeah, it's looking good. If he had provided more color on that, I think it would have been better. But yeah, overreaction, but not an unjustified overreaction.
Yeah. I'm really gassed about the buyback program that is going to go through now, especially after this crazy sell-off that we've seen this last week.
Yeah. Look, the management team has like $900 million. They should just authorize another 500 million in buybacks and just dump it in the price right now. It trades at 10 times PE. Like,
you can't lose on a buyback at that kind of price.
Yeah, you really can't. But if you want to take the other side, I guess, like, if you look at the share of regulated markets, it's about 45%. So if you just use that as the revenue figure, it trades on about an 18, 19 times PE on a forward basis. So that would be like what the market multiple is right now. And I think that's sort of what the market is pricing in. If you ask me, they're sort of saying, hey, we're just going to look at the regulated markets. But I've done a lot of computations, and I think by 2027, the share of regulated markets should be about 60% plus. And I think if that happens, the market should start ascribing like a significantly higher multiple to the business as a whole, because it trades like a dog in terms of valuation.
Trade like a dog.
It trades like a dog.
Yeah. But look, what's great about this, right, is that the conversations we're having is a movement from regulated markets not to unregulated markets. Sorry, movement from unregulated markets to regulated markets. We're not really having any conversations about competition or loss of organic market share.
Yeah.
This is just they are losing market share in the unregulated portion of their business, but it's not because a competitor is making a better game. It's just because management just don't want to lose their licenses in Europe, which is a proactive. It's a good step. I think it's the right step. And if you look at they provide a metric called the Games Round Index, which just measures activity in their network. It grew 10% quarter over quarter and posted the highest activity ever. So look, underlying growth is strong in their network. The business is just going through a transition period right now. But look, you guys are shareholders. Q2, there needs to be, I would say, not a deterioration of the financials. If they post roughly similar financials in terms of growth metrics, that's a good sign. If things deteriorate, I would probably start to deleverage this position, maybe make it a smaller position in your portfolio, because then you're probably looking at like a longer time period to get this done, and then it just becomes an opportunity cost.
I hate to move away from evolution, but that perfectly segments me into a big decision that I made this week. Fiscal, remember I was toying with the idea of getting rid of my SHD?
Yeah.
Yeah, I did it.
You pulled the trigger. You heard it
Basically what happened was I needed some money to buy some more evolution when it went down.
Yes.
Sold a good amount of my SGov, and the SGov was sitting around like 6% of the portfolio, which I did love. And Fabio may or may not have convinced me to sell the SHD.
Yeah, he's with me on the SCHD is mid bandwagon, which I'm a little bit less of a hater than I used to be, but still, I like evolution better, especially this cheap.
Yeah.
So I think evolution will do better from here than SCHD. But SCHD has defensive characteristics. It's held up pretty well this year, I think.
I would argue that evolution has some defensive characteristics. Like it doesn't really move.
It was holding up pretty well.
Yeah, until the earnings. That's...
Yeah. It was up about 8% for the year and before this drop. Oh no,
yeah, it was
15, like double digits. It was doing really, really well. But yeah, so are you planning to exit all your ETF positions? Is that why you did that?
No, we're SHG. Build up the SHG. Make it like it's right now. It's like 21% of the portfolio. So
yeah, he's staying more growth oriented with his ETFs.
I reckon that's the way to go. I think SCHG should do very, very well. That's like pretty much like Apple. It's like the NASDAQ 100.
Yeah.
Right?
It's like Google and Amazon and all that. Yeah.
It sucks because there's a few companies where I don't love the exposure to. Tesla, yeah. Apple, because it's just so overpriced. But I do see the Palantir gains. That's a positive.
No, I don't mind Apple. I think it probably has the widest moat in the world, and I think that's good. But yeah, Tesla's man.
That's a dumpster fire lately, huh?
Yeah. Look, Tesla it's just so volatile, and I don't know what robo-taxi is going to look like. I don't know what robotics is going to look like, but
it's always the next big things. Full self-driving will be here any day now, I swear.
Yeah.
All the while sales are collapsing. So,
yeah. You know, I put down a deposit for a Roadster in like 2018, and still no word. Still no word for
that. The deposits weren't very big though, right? They would let you just. I mean, it wasn't like 10 grand or something, was it?
It was 12,000 Australian.
12,000, jeez.
Yeah, which is
like. Isn't that like 5K, 6K US, something like that?
Yeah, something like that.
Jeez, okay. I don't know. Oh, there was 7K. One. Yeah, there was one thing that they had released, and it might have been the Cybertruck where they would let you put down like $250 or something when they first announced it.
Yeah,
and I don't know. But are you still at that money, or have you gotten it back, or?
No, I'm still waiting. I'm still on the waiting list.
For
It'll
7
eventually.
years. They've had you
But
waitlisted for 7 years.
yeah.
But all the
It
while
was,
they have that money.
we were promised deliveries in 2021. That was the timeline we were given when we 2020 production, 2021 delivery. It's 2025. So
GTA
I
6 is gonna release before it comes to. Good
You know,
lord.
people say that he's kind of like a bit of a con man or grifter kind of guy. Like, man, like I would feel totally conned if I'd been waiting 7 years on delivery of a car that I already put a deposit on. That's terrible.
What sucks is because that amount comes off the actual price of the car, but inflation has ravaged the price of cars and assets and houses, and so
Yeah,
it is what it is. But I actually own an MX-5, a Mazda Miata, and it's Mazda's Roadster, and I love Roadsters, so I'll be getting a Tesla Roadster, and if I could afford a Porsche, I'd be getting a Porsche. But yeah.
Yep.
I enjoy the Hyundai Tucson that I drive around town.
I had a friend that had a Mazda. I really liked it. It's really good.
Yeah, great cars. I highly recommend it.
No, I don't hate Apple. It's just like the valuation's just a little silly at some point. But I think it's a good company. It's just the right price.
Yeah. I mean, these businesses with a high, what's the word? A high consumer base tend to have higher multiples. Like Apple has 2.5 billion people using their products.
Yeah.
I think that well, the multiple doesn't justify it, but that's why the multiple is so high.
Yeah. Microsoft also reported this week. They had good earnings. I think I'm gonna hold on to the Microsoft.
Yeah.
I was debating selling it, but it's like, nah, this is too much of a good company to SHG it.
Yeah. I mean, you could put your SCHD money into Microsoft. I think did you I was listening to the Microsoft earnings call, and there was a sell side analyst who called the reacceleration of growth in Azure inspiring. And this one analyst kissed Nadella's ass for 20 seconds on the call. He was like, growth is so inspiring, you're an inspiration.
So
and
much
then,
praise.
yeah. And then went on to the question, and it was like a softball question. It was the funniest thing I thought.
Yeah, you get all kinds. The analyst where it's obviously he's new and it's his first call where he's gotten to ask a question, and he's trying to make sure everybody likes him and remembers his name.
It's crazy, but
fun stuff.
What else do you have in your portfolio?
Okay, I'll pull it up. The SCHD, that money went into it was around 9% of the portfolio. I put it was $3,000 to sell. I put half of it into SGov just to replenish that because I had been buying a lot recently. Then I bought 25 shares of SHG and then some Amazon. So basically 30% into SHG and Amazon, and then 30% into or the rest of it in SGov.
So SGov and then SHG and Amazon.
Yeah.
You know what? What do you see in Amazon? Because I was looking at the valuation and the business, and I don't think it's that attractive. To be honest.
Ooh. Well,
Fiscal, I'm gonna have a tag team for you here.
I mean, I've seen and heard the argument made that just Amazon Web Services justifies 160 or 170 of the share price, and then by that logic, you're getting everything else for $10 a share.
Yeah, that's true. It does have I think 40% margins, and it's $100 billion a year.
Yeah, and I think you also the free cash flow is not is not super high, but if you look at how high their capex is, I think that's to be expected. But if you look at the multiple of operating cash flow over time, it's at potentially, well, in this general area lately, it's been at basically its most attractive valuation ever. Maybe it might have been better in 2022 when it was like $80 or something, but best or second best valuation ever here recently when it was down at like 160 or whatever last year.
Right. Yeah. So yeah, operating cash flow is what they guide for, right? Or operating income, I think.
I'm not sure if they do that or like some kind of adjusted something.
Right.
Yeah.
Yeah. They guide for operating cash flow. That's the guidance, and they guided for 15 billion. Yeah. Okay. Yeah. True. It has come down a lot, significantly.
Yeah.
I just think like a business like Amazon. I was like looking at because free cash flow fell like negative 8 billion. CapEx.
And
CapEx.
The thing is, if the operating cash flow continues to go up, it means that indicates to me is that the CapEx is still a good investment as long as it's continuing to drive up operating cash flow. And so if it comes to the point where the growth in operating cash flow slows down pretty heavily, then I think they can take their foot off the gas of the CapEx, and then you would see the free cash flow as a result go up very quickly. It would explode, so to speak, if that would explode. Yeah.
I'm pulling up a few of the other core holdings right now while you discuss.
Like the big issue I have with Amazon is like the CapEx is growing. Like CapEx last year was 55 billion. CapEx forecast this year, last financial year, 55 billion. This financial year, 94 billion. Forecast 108 billion. Like CapEx is growing like 30% compounded. Like, so Amazon's operating cash flow is growing like low double digits. I don't think the CapEx is translating to the income that Amazon is justified to trade at. And also the free cash flow multiples, like this business should have like 10 to 15% free cash flow margins. They have like low single digits, some quarters negative. I don't know. I think many people, at least from what I can gauge, is like there's going to be a massive like operating leverage burst in the company. And I just don't think that's going to happen. I think CapEx is going to remain perpetually high. They're never going to buy back stock. I don't think they're going to pay a dividend. I don't know. I just don't see it as attractive. But I could be wrong.
Yeah, my understanding is a lot of the CapEx nowadays is going into AWS, which is the highest margin and fastest growing part of the company, to my understanding.
But what about AI?
They
didn't mention AI a lot on the earnings call, a lot more than I'd like. That's
Well, they use a lot of like automation and robots and stuff in their warehouses and things, like to pick stuff for.
I think that's like the more practical use for AI than like whole IT stuff.
Yeah, they actually have a pricing segment that's growing 17%. That's actually pretty good.
Yeah, they've got a lot of and also like you want to talk about moats. Like I don't like Apple's in that conversation, but I think Amazon, to be fair, is in that conversation too.
Absolutely.
For extreme moatiness.
Dude, this company makes so much revenue, $650 billion. That's so insane.
I think they'll be the first corporation to hit $1 trillion in annual revenue.
Yeah, 100%. Dude, that's so much. This is literally more revenue than I think the Australian government brings in taxation.
I think they may pass Walmart in revenue soon, or they may already have.
Yeah, I think they have.
They're pretty, because they were pretty close last I looked, like both in the 600s somewhere.
Right, let's have a look at Walmart. Walmart's trailing 12-month revenue is 680 billion. Amazon's is 650. So they're on their heels.
Like a year away from passing them, basically, at the rate that they've been growing, I think.
Yeah, no, Amazon does have a wide moat. I think AWS is probably like still the best cloud platform to use, just because all of their underlying software is open source, I think. And that just means like integrating it with anything else. Like if you have a data center and you use AWS and you want to put your accelerators as a byproduct for that data center, like, it's super easy with AWS because it's open source. All of
The other crazy thing I was seeing, they have, I'll probably get the exact number wrong. Is it like 180 million Prime subscribers in North America alone?
I'll fact check you there.
Yeah, they do have that Prime subscription. Dude, that comes with a ton of benefits as well.
Yeah,
196 mil.
People, I think people glaze like Costco and they glaze Netflix for their subscription, but then it's look at Amazon though. Like,
Yeah,
give them a little credit where it's due.
100%. Great business. Don't get me wrong. I personally can't get to the valuation, but
I was right there with you for a very long time, and I started to look at it from a different perspective, and I see what could happen with it, I guess. So maybe I became a little bit more, I think, a believer in what they could actually do in the future, even if it's not translating to bottom line free cash flow today.
what owning MPW does to a man. Highs and lows. Some of the biggest parts of the portfolio. SHG largest holding 21%, Amazon 12%, Visa 12%, Escov 10%, Vici 8%, Microsoft 8%, iTide 5.8%, Uber 5.5%, Evolution 5%, Disney 5%, TKO 2%, BTI 1%, and Grab 1%. Grab and BTI both up 23%, by the way.
Also,
two smallest holdings that are up 20%. Ironic.
This is actually interesting. Is this based on an earnings multiple?
Yeah, I'd assume.
Walmart's ridiculous. Is that true that Walmart trades at a more expensive valuation than Amazon? If that's the case, that's absolutely wild to me.
31p. Yeah, it does. 9.
Okay.
I think it trades at like low 30s multiple.
Yeah, Amazon 31p and Walmart's 40 from what I'm seeing.
That's insane.
Okay, let me just make a
Oh my god, Walmart's at a price free cash flow of 62. They aren't doing CapEx like Amazon, are they?
Yeah.
Amazon has a lower cap.
Yeah, you're gonna have Walmart web services soon, buddy.
All the rednecks use it.
The online segment is growing like mid-20s though, and I think the growth is it just keeps chugging along there. So I guess that's what they're pricing in, but it's still a largely small segment of their business, but growing.
I think people just think it's defensive.
Yeah.
Like the McDonald's effect.
Dude, I think the most defensive stock in the whole world is Visa or MasterCard. Like I was thinking about this.
Yeah.
I realized this like when I think last year, like if inflation increases, right, and you buy something that used to be 100 and is now 150, like Walmart may not be able to pass that on fully to the consumer, but that $150 goes through Visa's payment rails, and they just take their fee off that, the full amount that's processed. Like it's almost like an inflation hedge to a degree.
Yeah, Lena Khan was the only chance of those two companies failing, and that's gone. I remember after election day, they both went up like 4%. That was funny.
When it comes to the like inflation stuff, I know what Walmart likes to do is they tend to like to squeeze the suppliers as well. And like there was a story from many years ago how they basically told you know Vlasic pickles. They basically told the parent company or whoever actually makes Vlasic. I don't know if Vlasic is a standalone company or if it's a subsidiary of somebody, but they basically told them to in order to be on the shelves of Walmart, you've got to lower your price to your wholesale price to us by X amount, and it was such like an amount that like it just dropped their margin like per jar of pickles to like pennies, like literal pennies. But they felt like they had to do it because if you're not on the shelves in Walmart, you're not selling, basically.
Yeah, I mean, especially with the volume that Walmart does, like 650 billion in revenue. That's there's probably not there's no other suppliers bigger.
Yeah,
in
they
America,
can.
I don't know.
So yeah, they will do whatever they have to do. Essentially, they have that. I guess the economy of scale, the pricing power, whatever you want to say, they have all of it.
Yeah, that's true. I would say Costco is the same, but they actually give the cost, the discount back to the consumer. So
yeah,
I guess it is.
yeah, but it is true that Costco does have a lot of juice with the suppliers.
Yeah.
Because they want to be in Costco because people are buying like practically pallets of product from there. So obviously you want to be on their shelves if you want to move quantity.
Yeah, Costco is like a beloved stock, absolutely beloved stock. Same with actually Apple as well. Like, I think if retail just love the stock, it'll trade at a higher multiple. It's weird.
Yeah. And I think it's because like a lot of the people that own Costco stock also are members and customers. And so because they love the store and they feel like a connection to it, they feel a connection to the stock and like are less inclined to sell it, I think.
Yeah, 100%. That's literally it. Like, they use the product every week. It's like Apple. Everyone has an iPhone. Like, my wife's next phone will be an iPhone. Like, I literally asked her this. This was a couple of months. I was like, "What's your next phone going to be?" She says, "An iPhone." It's not even. Didn't even think about it. So, these consumer stocks are just loved. They're just loved.
Yeah. I mean, Coca-Cola's, pretty expensive for no growth as well, and I think that
I haven't done anything in the last
plays
5
into
years,
it. It's a beloved brand that's been around 100 years, and people like Coke drinkers are notoriously like territorial and
drinkers.
They hate on the Pepsi people.
Drinkers.
Yeah, not sorters,
took a while. Do you think there's been some very influential whales out in the Google community that have said it's a generational buying opportunity right now? Would you agree or disagree?
No, I don't think so. I really don't think so, dude. And Google's not cheap. It trades at 26 price to free cash flow. That's expensive. I know CapEx, but that's expensive. But and because free cash flow is everything, like in my opinion. But listen, Google's cheap, and I think you'll do very, very well. But based on my own experience, like, when it comes to searching stuff and just general information, I go straight to ChatGPT and Grok, and I hardly use Google. Like, even on my phone, like I go to the AI apps, and I think it's not going to happen overnight. It's going to take a very, very long time. But I think over time, Google will eventually lose market share in search. As long as they can grow the nominal figure of dollars more, the stock should do very, very well. But yeah, I don't know. I don't think Google's a generational buying opportunity. I think evolution is a generational buying opportunity.
Oh, I like that.
But not. I think Google's a good buy here, but not generational. Like.
Yeah. I think
I would
most of the time people saying it's a generational, they're exaggerating in almost every case that you hear recently.
The Google whale, I don't think he's exaggerating it. The Google whale thinks it's truly generational.
It's true. Like, dude, a generational opportunity is like, once you buy that stock, you are never seeing that lows again, and it's just up to the right forever.
Yeah.
I don't see that with Google.
I would argue like buying Apple in like 2007 or something, or 2008 maybe, during the economic downturn, but before the iPhone came out, like that's probably generational.
Uber at $74 the other week.
Uber at $74.
Uber's done really well.
Yeah,
Uber's up 40% year to date. It's nuts.
It's been a good one.
Yeah, I'm pretty heavy in Uber.
You're in Uber, nice.
Anytime it hits that like 65, it's just been an obvious buy since like February.
We got a member question.
We do.
ILPT. What stock is that? Does anybody know this ticker? Because I don't.
No. Yeah, Uber's been really good.
I want it. Is it Innovative Industrial Properties? Maybe.
It's Industrial Logistic Properties Trust.
Oh,
$3
I've
REIT. You might
never
want to
really
get
heard
in
of it.
it. It looks just like MPW.
I'd like.
Chart looks exactly the same.
Well, then obviously I have to buy because
The
I'm a
dividend isn't big though. You
falling knife cigar butt. I have to buy it.
Yeah.
So I don't have an opinion on it because I've literally never looked into ILPT, but maybe I will.
Yeah.
Maybe request it on the community page, and maybe we'll have to do like a members only video about it.
That's how I found out about Evolution and bought it.
Yeah.
So I would assume by your answer earlier, you didn't buy any Evolution this week, Chase.
No, I didn't buy any. I might buy some more, but it was 8% of my portfolio. After the drop, it's now like 7%, and I'll probably keep it there.
Yeah, you're still heavy allocated, and I don't think you're down that much from a cost basis. So
yeah, I'm down about 5% on the position. If it gets down to if it gets in like the mid 60s, I might buy some more and then exit at the low 60s if it keeps falling. But I think it's gonna stabilize around the $70 area. But
yeah, like I'm not some expert trader, but it's like
if they
rarely
deploy
seen it
buyback,
go
do you
below
think
70.
that could uplift it at all, or do you think it's just going to be stuck in this area for a bit?
I think we're gonna trade sideways. It may go up 10%. It'll probably go down a couple percent. Like if we're gonna trade in this, like I would say anywhere from like mid 60s to mid 70s range until the next quarterly report. That's probably what'll happen. The dividend is now 5%. So, and that's getting paid, I think, next week or week after next.
A lot of people sold right before they paid the giant dividend. It's a choice.
Yeah.
Actually, yeah. Once I get the dividend, I'll basically be break even again.
Yeah. Yeah. I'll probably use the dividend to buy more.
Yeah.
I should get $700-800.
Question for you: is it an over-the-counter thing where you have to pay the extra fee to buy the stock, or for you, is it actually listed?
I own both the EVVTY ADR, so there's an ADR fee, and I think it's like 50. My broker, it's like 50 cents per transaction.
Because on Schwab we have to pay like $6 or $7 to buy any shares of it, so it's better for us to only buy like we only buy it if we're buying like a quantity, because obviously, like if you're only buying one share at a time or something, $6 or $7 is a big it's a big chunk. So
the ADR fee for me is 50 cents per transaction, but we do there's no commissionless trading in Australia. We still pay commissions like per trade.
So they only have basically commissions on OTC stocks. If it was on the NYSE or the NASDAQ, we wouldn't, but because it's OTC, we have to pay that $6 or $7. So my minimum order for Evolution is just literally, it's 100 shares, and that's all I have. And I'm not probably going to be adding more just because I'm most likely not going to have enough cash to want to throw that much at it again. So
gotcha. That makes a lot of sense. So what are you going to do with dividend?
Yeah, you're getting like a nice little 350 bagger.
There's a unnamed cannabis micro.
Oh no! No!
Which one? The one we talked about privately with.
Oh, I know. Yeah. Okay. Maybe I'll have to join with you.
No, I'm doing quite well on that one. Okay. But yeah, I want to get the position sized up a little bit, because because it's so small, once it starts to catch on, it'll go fast. So
you think I should add to my grab after earnings this week?
So yeah, I just threw a short kind of condensed summary of the highlights from earnings, and basically management's guidance continues to basically be spot on with like revenue growth and everything else. And they actually slightly upgraded and tightened their guidance on their adjusted EBITDA, which is like kind of that's their go-to profitability metric. They have to do different adjustments, by the way, for things. It's not to like hide stuff. It's because they have a banking segment mixed with a riot. So they have, since the segments and the reporting is a little bit weird, they have to make all these adjustments. Otherwise, if you just looked at, for example, free cash flow without doing any adjustments, you would end up seeing customer deposits included in there, and it would artificially inflate the numbers.
Mhm.
So they do the adjustments to actually correct the numbers for artificial inflation in a lot of cases.
Yeah. No, it's done like nice for me. Like 22%, like 3 weeks. That's like it's more than I've seen like 3 years with some companies.
Yeah,
Michael Gade asked, that's a great name. Asked a great question. Chase, what are your 5-year assumptions for evolution?
What are my 5-year assumptions? All right. So can I have them right here. Okay, so if you assume trailing 12-month revenue of $2 billion, and then over the next 5 years, I have growth of 5%, 10%, 9%, 8%. So in 2029, you have $3 billion of revenue, and then you apply a 51% free cash flow margin. You're looking at about free cash flow of about $1.6 billion. I'm using a EV to free cash flow multiple of 13. If you use that, you get a 2029 stock price of about $130, plus the dividend of about 4.5%. The projected 5-year return would be like 17 to 18%. So very, very attractive.
Yeah. Another thing that me and Seymour Duck, who's not here again suspiciously, you know what? Maybe there's a new theory that you're secretly Seymour Duck, and that there's no way that you can. That might be a new theory that's going on. No,
No, I have. He's literally hit me up in my DM, so I'm definitely not Seymour Duck.
Do we know where Seymour is? Is he okay?
He's probably fell asleep because he works late shifts in a suspicious industry. Very mysterious man. No, we were discussing like in a few years, maybe the potential of them headquartering in the United States, so they can just basically get listed on the S&P or whatever, and it would just accessibility.
The AGM is next week, and that's one of the line items they're going to vote on. Should you do a US listing? And dude, I think we might see one this year, because
that could be a catalyst.
The original owners of Evolution own about 20%, 22% of the current shares outstanding. One of their sons is now on the board of directors, and he's based in the USA. He's overseeing the US operations. I think the stars could align right there for US listing if they really push for it. So I think, like, if you don't see a US listing this year, I think you'll see one soon for sure.
So do you? How much do you care one way or the other about the US listing?
None at all.
Okay, I'm kind of in the same boat. Actually, I kind of like the fact that it sort of flies under the radar, because I think if it was US listed, it would probably not have been as cheap as it was when I bought it.
Yeah, after we bought, now it can be US listed.
The second it comes on a US listing, I think it'll trade at a premium. In fact, the ADR does trade at a slight premium, like consistently to the actual Swedish listing, which is weird. But yeah, US listing. It trades at about a consistent 3% premium.
Interesting.
Which is very weird. Like ADRs normally trade at about a 3% discount, except for TSM. TSM is a 30%. By the way, if any of you guys are going to buy TSM, right, don't buy the US stock. Buy the Taipei stock and do a transfer to the US, and you'll get like 30% automatic appreciation. It's ridiculous.
That's insane.
I know a certain TSM bag holder that would like that information. And speaking of said bag holders, this is a funny moment we have to bring up. I think we officially know that we're like stock market's back, and we're going to be another bull run when we're getting the "this is ridiculous" tweets from Dividend Dude about Palantir. I mean, like, I can't complain. These are times that I enjoyed.
Listen, this is what I said in my thing about Grab. The regards are coming.
Oh back. Hey, I saw what's his name? Amit tweeted something earlier today. And I think Chase, you responded to it, and
Yeah. I responded to his Grab tweet. He's just talking about the GoTo acquisition. So,
Yeah.
dude, you know what? I think Grab's attractive. I think it's attractive stock.
Yep.
It's got so much cash.
Yep. It's one of my top Grab holdings is one of my top holdings, and it actually is good. It's funny that it's also being pumped on social media, but it is, I think, actually good with that aside.
Yeah.
Yeah, this might be the funniest tweet of the week. This guy responded to a Dividend Dude tweet, and it was basically, I sold at $35, Palantir, obviously. After following your analysis, you've ruined financial plans for me and my family. Shame on you for spreading misinformation and hurting other people.
Oh man, that's crazy.
I bet it's, I don't think he actually, I mean, he could have. It wouldn't shock me. But
Yeah. That's so fun.
Relying on Dividend Dude for financial advice to the family is definitely a choice.
Man, look, truthfully, Palantir is expensive, but I think until they miss earnings in a big way, it'll keep being expensive.
Yep.
But regardless, we'll pump it.
Yeah.
We are 55 minutes into the show now. I'd like to give anybody in the comment section any last comments, questions, concerns for any three of us. Talking points.
Did miss a member comment.
We did.
And it's just so the REIT they were talking about, I guess Beater has a new favorite. Beater's a guy in my Discord.
I would avoid it. Yeah.
But no, I have seen them talking in there about that ticker. It's just I haven't really gone and looked into it because it's just it's not piquing my interest right now. I have one positive. That's enough.
I will share something that I've been toying around with the idea with. Is if High Tide gets up to like $3 again, maybe trimming and just a little bit.
What is High Tide in your portfolio? Like 3% or something?
It's like 6% now.
Trimming a 6% position if it becomes 7%. I mean, I don't know.
I just
that's like I think you're overmanaging at that point, Ryan. I think you're overmanaging at that point.
That might be fair,
dude. This High Tide stock has been a bit of a wild ride,
dude.
Last year.
Yeah,
small caps, buddy.
Yeah, small caps are to life.
And like I think the U.S. Canada tariff trade war like had people freaking out about all Canadian stocks.
Well, Canadian like the big issue though with High Tide is like from what I've my due diligence, my research is just like the Canadian consumer in general.
Yeah,
and like my expertise is not very high with it, but I have a certain individual that likes to do that information for me when it comes to geopolitical and economic talks, I'll say.
Right.
And I trust him a lot, and there are some concerns there. So
with Canada, yeah.
Who knows? Maybe we'll see.
I think ultimately High Tide itself is going to do fine, and they're not going to just be Canadian. Hopefully,
that is fair. Yeah. Like, the other thing we can't mention.
Yeah, big plans.
The thing with stocks is holding through the drawdowns. It's tough. Like ultimately, that's how you make your money. Like, dude, individual stocks will have massive drawdowns, and if you could as long as the thesis is unchanged, if you just hold, you'll do very, very well in the long term. Look at Tesla in the last year. I know it's a meme stock, but the stock last year, right, up until October was down 50% for the year. Yep. It finished up 150% by December. Nuts, absolutely nuts. So
I struggle when they go up. To be honest. It's my issue. I'm fine with. Yeah, if I Microsoft, I was considering. I'm not gonna do it, but I'm up at 80%. But I'm selling it just to pretty much put it into a better company or ETF it. So it's.
But yeah, that is a good point though. If you have the wherewithal to hold through the pain, and and are confident in the value of what you have being higher than the discounted price, And heck, if you can even stomach adding more when it's deeply, deeply discounted, you really can kill it.
Well, I have a good
Yeah.
question for both of you. What were some of your best, we'll say trades? That's a little short-term mindset, but what were some of your best trades or buys that you had during the whole panic sell-off?
Well, I had during the panic sell-off, like on Liberation Day, I sold like a ton of puts 1 month out for a company called ANET, Arista Networks.
Ooh.
If you don't know what they are, literally one of the widest modes ever. Those puts are up significantly, like significantly. I didn't get assigned, and I just got to close them out for money. So
Yeah. Let me see.
that was like a great. Essentially, it was like pretty much getting long Arista at like 70, and the stock's like $80 or high 80s now.
Yeah. What do I have here? So I had some goog at those really, really low prices.
The generational buy.
Yeah. Definitely was able to get to expand Uber. And I had some sold puts as well on some things that that didn't end up getting assigned because things ended up kind of recovering a little bit on those. So got some cash, some good cash flow, some income, as they say. I picked up a little bit more high tide as well when things were kind of down in the dumps. So yeah, it's recovered pretty steady from there. So I'm pretty happy with that. I have some grab puts that are about to expire worthless, and I'll keep the cash from those. So yeah.
Is Grab traded on the NASDAQ?
Grab, you said?
Yeah. Oh my goodness, it is. Crazy. I didn't realize that. I didn't realize Grab was traded on the NASDAQ.
Oh, you were thinking it might be like
in Southeast Asia, on Singapore. Yeah. Interesting.
Yeah.
But dude, in hindsight, selling at the Liberation Day lows was the play. That was the game plan, because there was still so much uncertainty, and like puts were a great way to just like sell 5% out the money, collect like amazing premiums, and that's really what I did. I plowed a ton into ANET puts, won't get assigned, collected some very, very nice premiums.
Yeah.
So
the thing that I think is funny, like I think a lot of people out there, and I don't have any proof of this, but I think a lot of people out there don't realize the difference between Singapore and China, and Grab is a Singaporean country. And I've noticed sometimes when China stocks get hit, like coincidentally Grab does. I think some people mistakenly think that there's like a China risk somehow associated with Grab, even though they're a Singaporean based company that has no Chinese operations at all.
Yeah, I think that's part of the reason for like all of Southeast Asia kind of just trading at a discount. There's that inherent China risk, which I don't think is a risk at all. Like, what? I was doing the research on just geopolitics, and I'm no expert, right? I'm an accountant by trade, not a geopolitical analyst. But dude, I don't think China will ever invade Taiwan.
Like, I have doubts about that as well. Like I don't think whatever the perceived benefit is outweighs the massive drawbacks for them. And I mean, yeah, it would be there would be a lot of negatives on us too, but it's like, why cut off your nose to spite your face kind of thing.
Yeah. Also, like one of the craziest things, there's this thing that the CCP believe. It's called the China One policy. And so pretty much it's pretty much a policy where they believe that Taiwan belongs to them, but they can have a separate government. Like it's pretty much like Hong Kong in China, right? This is crazy. So Joe Biden, like 2 years ago or a year ago when he was president, was asked, what's your view if China invades Taiwan? And he was like, yeah, we'll help Taiwan. Like we'll support Taiwan. 2 hours later, the White House Twitter account, this is crazy. The White House Twitter account sends a message and it's like, no, the official White House policy is that we believe in the China One policy. So in other words, the White House is like, yeah, like Taiwan belongs to China. So
but has an independent government.
yeah.
While
So like,
simultaneously still being part of China.
yeah. So as long as the US maintains that view, I don't think China will actually invade Taiwan. They'll do like military incursions and stuff like that just to posture. But like, unless the US government actually goes, yeah, no, we're like China, we don't believe in this policy, which could change with Trump. I don't think it will. But until that changes, like, there's zero chance, zero risk China will invade Taiwan.
Yeah, I think the chances are pretty low. Also, I mean, I'll never say never, but if somebody said like I have to, if somebody gave me like, I don't know, $50K and said that I had to make a wager yes or no on it in call a time frame like the next 5 years, I would wager the money on no.
Yeah. Well, they haven't invaded in 20 years, so I don't think that they will in the next 5.
Yeah.
Before we head out of here, 2 things. I'll start off. One, we have a members only little live. It won't be that long, like 15 or 20 minutes with me and Fiscal after, because I want to press him more about this unnamed cannabis stock that I'm considering adding a small allocation to. And also, Starbucks completely shit the bed this week, but it recovered. So, yeah. I mean, like, I'm happy. I'm so happy I sold out of Starbucks. It's weird. I was arguing with somebody in Fabio's Discord, and it was like a Starbucks bowl, and I'm like giving him the counter arguments, and I felt horrible doing it. It was like Anakin when he turned to the Sith. It was, how could I do this? If you're not with me, then you're my enemy.
And I know I shouldn't.
I went into a Starbucks, and they write your names on the cups again, right? But
yeah.
That just, in my opinion, that just makes the process longer.
They don't write the names on the cups anymore. They'll write like messages. Like they'll be like, "Have a great day. Smile today. The sun's out." Or like they'll just like the corny stuff. But yeah, it's
right.
It's still $5 coffee.
They wrote my name. Fun fact.
40p. All right, we've been on here for an hour 6 minutes. It was an absolute pleasure. Once again, the duck is flaked on us.
Yeah.
Unfortunate.
His track record as a guest is falling off hard.
We're gonna have to peer pressure on getting channel memberships for everybody in the chat. Once again, we have a members only show after find out about our hidden stock that we're pumping. Definitely. We'll also share some more information about where Raj Grover has truly been, where only we know. But Chase, where can the people find you? Obviously, you're big over on Twitter.
Yeah, guys, you can find me on Twitter, FinFluential X, or any of my YouTube channels, FinFluential Television or FinFluential Media. It's been a pleasure, absolute pleasure. Love coming on here, guys.
Yeah, always a pleasure.
Always fun talking to you.
When Evolution is back at $100 by the end of the year, we'll see you.
Yeah. We're gonna have a pump it stream when it hits 100. Anyway,
channel membership for everybody.
You guys have a good afternoon, guys.
We'll see you. What a pleasure. Can you? We'll answer a few questions before everybody hops out. And to shill our members only stream, where I'll post the link where you can all become channel members now. Once again, as I mentioned last week, and it was a successful sales strategy, I will be doxing and leaking Fiscal Philosophy's social security number. If you do become a channel member, I have the information, I have the Dropbox link, and I'm not afraid to do it. I will. I swear I will. I will pull an oracle.
So let's see. Is this the question he wants answered?
Yeah. I
Pfizer, huh?
I can't do Pfizer, dude. I can't.
I really haven't. I looked at Pfizer in the past. I just haven't really lately.
It's
so many stocks, so little time. You know what I mean?
Yeah. We tired commentary is just hilarious. It just goes by me, but then I occasionally want to like read one of it. It's like, Jesus Christ.
Yeah, he's a pleasure to have in the chat there.
Oh, good question from a channel member who we of course value
on
very
him
much.
I I'd consider being a customer. Probably, I don't know if I'd be an investor today's price, I haven't really, I haven't looked too closely at the valuation though.
Yeah, there's just not many, like, I'm really starting to like this idea of getting like 5 or 6 companies at 2% of the portfolio and just having them like, those grab kind of companies. A few others that I were considering throwing in was like Progressive, KKR.
Yeah. I'm in KKR a little bit.
Yeah, just like nothing wild.
That's another one I added when everything was collapsed, and it's come back pretty well.
Like, I want to have a few positions where I can like put a lot of my money into and kind of keep up with. But then there's also a few where like I'll let the other people just do the due diligence for me.
Blake brings up a good point. Yeah, we should see if we can maybe we should do a HIMS episode sometime.
Yeah, he's also in NBIS, which is he's very convicted on. Yeah.
Yeah.
Boner pills for the win.
Yep. Sex sells, guys.
Yeah. Seymour Duck's a very mysterious man. He's got, if you've stayed past after hours before, you know about his ties to the dirty film industry, if you know what I mean. He's got ties. We got ties. He knows Julius Caesar himself.
It's true. It's true. How's Julius?
Yeah. So once again, you want
since stocks are where it's at. Yeah, I agree.
We're literally just going to continue this conversation for like 10 or 15 more minutes for a members only live stream. So got to give the people some value. Nobody's requested any deep dives, so it is what it is. Thank you all for tuning in once again in hour 10. Smash the like button, subscribe, do dividends, sex, not drugs. We will see you on the members only stream. And of course, cash flow is king.
King.
Oh, yeah.